A company just posted the best quarter in its history, profit up 19 times over last year, and investors sold the stock anyway. That's not a typo, and it's the whole tension in this market in one headline. Good morning, it's Tuesday, July 7th. I'm Nick Vertucci with Eleanor Whitfield and Marcus Brooks. Grab your coffee. We've got a record, Dow to unpack, a scoreboard with some bad news for both of my analysts, and a chip story that just keeps getting stranger. We've also pulled Dave Sullivan into the fourth chair this morning. The last 24 hours in semiconductors needed someone who lives in that world full time.
Morning, Nick. Glad to be back. And yeah, this is the good kind of complicated.
Good morning, everyone.
Morning. Nick, before you say anything else, I already know what's coming.
You do.
Oh, I do. Let's just get it over with.
Scoreboard then, because it's rough today. Yesterday's show, Eleanor, you called the 10 o'clock ISM services print under 50 means contraction, means the one bad jobs report story becomes an economy's turning story.
I remember exactly what I said.
It printed 54.
It did. Down half a point from May, but 54 is expansion, full stop, 24th straight month of it. Employment inside that report actually improved, crossed back into growth from contraction the month before. I called for a crack and got a cooling. Those are not the same thing, and I got it wrong.
I'll allow myself 30 seconds of enjoying that.
Take your 30 seconds, because yours isn't better. Micron, you needed it above $1,100 at yesterday's close.
It closed at $984.75.
Which is $115 away from where you needed it.
Yeah, not close, not a rounding error, not give it one more session. I said I wouldn't wait for the final print if it broke decisively, and it broke decisively before I even got the chance to hedge my own call. Credit where it's due, that's a clean loss.
So the record now reads, I'm 1-1, streak reset to a loss. Marcus is 0-2, 2 losses running.
Please don't say it like that.
I'm required to say it exactly like that. It's the format. Oh, and 2, streak of -2. Dave, you're new to the chair, so you're at 0, untested, unblemished. Enjoy it while it lasts.
Well, I'll take the honeymoon.
All right, humility noted on both sides. Let's get into what actually happened, because Monday gave us a lot to argue about. The Dow closed at a fresh record, 53,055, up about 0.3%. S&P added 0.7 to 7537, also a record close. Nasdaq led everybody, up better than 1% to 26,121.
And the story underneath all three is the same story. Memory chips came roaring back. SanDisk and Western Digital each up around 5%, Micron clawing back into positive territory after being down more than 5% at midday.
The spark was Foxconn. Hanhai reported Sunday that second quarter revenue jumped 40% year over year, way ahead of estimates, all riding AI server demand. One supplier's earnings beat, and it flipped sentiment across an entire sector in a single session.
That's a strange amount of leverage for one company's number to have.
It's exactly the thing that worries me about this whole trade. When one earnings report from a contract manufacturer in Taiwan can swing hundreds of billions in market cap on this side of the Pacific, that's not a market pricing fundamentals stock by stock. That's a market trading one narrative through a dozen different tickers.
Or it's a market correctly reading that the AI build-out is one interconnected supply chain, and a strong link tells you something real about the whole chain. UBS pushed its DRAM deficit call out to 2028 yesterday. Citi and BofA both raised targets on the group. That's not vibes, that's 3 separate desks doing the math and landing in the same place.
And Nvidia sat out the party.
Nvidia was up less than 1%, while the semiconductor index as a whole jumped over 3%. That gap is the story nobody wanted to say out loud on a day the Dow hit a record. There was a weekend report claiming the next-gen Kyber rack architecture is facing manufacturing delays, pushing it into 2028. Nvidia came out and said the roadmap's intact.
Do you believe them?
I believe they believe it. Whether a PCB manufacturing bottleneck actually clears on schedule is a different question, and it's the kind of thing that doesn't show up cleanly until it's already late. What I'd watch is whether any of Nvidia's actual customers, the hyperscalers ordering the racks, say anything about their own timeline shifting. That's a real signal. A company denying a rumor about itself is not.
Which is a good instinct, and it's why I don't love a rally built on everyone but the category leader is up.
I'd frame it differently. Capital's broadening out. 2 years of this trade being one stock, Nvidia, and now money's flowing into memory, into test equipment, into custom silicon, because the thesis is the whole supply chain benefits from a structural DRAM shortage, not just whoever wins the model war. Teradyne's up 4% on a Goldman upgrade. AMD's target got hiked to 640 from 450 in the same note. That's breadth, and breadth is healthy.
All right, hold that thought because it walks straight into the story that broke overnight. And Dave, this is yours.
This is the one. Samsung put out preliminary numbers this morning. Korea time, operating profit around 89 trillion won, call it $58 billion on about 171 trillion won in sales. To beat the forecast of roughly 86 trillion, and the year-over-year growth number is almost absurd. Profit up somewhere around 19 times what it was a year ago. Third straight record quarter.
So a historic beat.
Historic beat, and the stock fell anyway.
Which is exactly the crack I've been pointing at. If the single biggest earnings surprise in the company's recent history gets sold, that's the market telling you it's not pricing the quarter that just happened. It's pricing the capex and demand questions sitting on top of it. You don't sell a 19 times beat because you're worried about nothing.
Or, and stay with me, you sell it because the stock had already priced in most of that beat before it printed. And record profit, stock down, is a sell the news reflex, not a verdict on demand. That happens constantly in earnings season, and it doesn't mean the thesis is broken.
Then why now, on the best number they've ever posted?
Because expectations for AI chip names have gotten so far ahead of the actual print that even a blowout doesn't clear the bar investors quietly set. That's a valuation problem, not a demand problem. Those are different diseases with different treatments.
Eleanor, give me a level, not a vibe. What would change your mind here?
An actual capex guidance cut from Samsung or SK Hynix. A real number coming down, not a stock reaction to a headline. Right now, I have one data point, a stock price move, standing in for a fundamental change I haven't actually seen in writing anywhere.
Fair. Marcus, same question. What would make you concede?
If SK Hynix's book gets priced at the bottom of the range or has to be cut further after Thursday, that's real institutional money voting with actual capital, not headline reaction. Speaking of,
SK Hynix trimmed the ADR. It was pitched at up to $29 billion a couple weeks back. Overnight, they cut it to a maximum of about $28 billion, reflecting where the stock's actually trading in Seoul, which has come in some since late June. Final pricing, Thursday, debut Friday on the Nasdaq, ticker SKHY.
Walk the room through why that number moved.
The ADR price tracks the Korean listing. Korean shares closed lower than they were 3 weeks ago when the deal was first sized, so the dollar number attached to the same share count came down with it. It's mechanical, not necessarily a demand signal by itself, but Eleanor's going to tell you it's not nothing either.
It's not nothing. You don't cut the size of the largest ADR ever attempted because everything's going great. Even a mechanical explanation still means the underlying stock got cheaper for a reason.
it's still going to be the biggest ADR ever done, bigger than Alibaba, bigger than Aramco's US listing. Trimmed by $1 billion off an original number that was already historic doesn't move me much.
You two are still nowhere near each other on this.
No.
No, and I don't think we get there before Friday.
Then that's the tiebreak, same as yesterday. How SKHY actually opens Friday, whether the book gets upsized or cut again by Thursday's pricing, and whether Samsung stock stabilizes once today's shock wears off. Circle all three. Dave, does the tech world actually think demand is bottomless, or is that a straw man at this point?
Nobody serious thinks it's literally bottomless. The real debate inside the industry is about the shape of the curve. Is HBM demand still accelerating, or has it just moved from impossible to satisfy to merely enormous? Those look identical from the outside for a while, and then they don't.
All right, hold all of that. We've got more ground to cover and a clock. Quick human moment before we get back to it. I tried a new coffee shop on the way in this morning that advertised the 12-minute pour over, and I want everyone to know I timed it. 14 minutes.
That's not a coffee shop. That's a hostage situation.
Did you at least get a good cup out of the 14 minutes?
Genuinely excellent. I'm conflicted about my own loyalty.
This is the most relatable thing anyone said all morning.
Back to the tape. Dell, because Monday had one of the stranger corporate stories of the year, and it happened at the White House.
Literally, at the White House. President Trump held the first ever joint New York Stock Exchange and Nasdaq opening bell ceremony there Monday, tied to the launch of the new Trump Accounts Child Savings Program, and told Americans, on camera, to go out and buy a Dell computer.
And the stock jumped, depending which print you look at, somewhere between 7 and 10% intraday, a fresh high near 429.
Translate for me. Why does a comment like that even move a stock this size?
Because it's not the first time. This is the third distinct Trump-linked rally in Dell this year. February, May, and now July, and each one's added real, lasting share price gains, not just a one-day pop that fades. The stock's up something like 250% since the first one in February.
Which is precisely the part that should make people uncomfortable rather than excited. This isn't just an endorsement. The president has personally purchased Dell shares, disclosed up to $5 million worth, weeks before the company won a $9.7 billion Pentagon contract. Watchdog groups have flagged the proximity between the purchases, the endorsements, and that contract as a real conflict of interest concern.
I won't defend the optics, they're bad, full stop. But underneath the politics, there's an actual business here. AI server revenue was up 757% last quarter, backlogs over $50 billion. JP Morgan took their target from 280 to 500 on the fundamentals, not on a tweet.
So which is doing the heavier lifting, the politics or the AI backlog?
Nobody can cleanly separate them anymore, and that's actually the most important part of the story. Every dollar of Dell's re-rating this year is some blend of a real infrastructure supercycle and a political tailwind that has no analog anywhere else in megacap tech.
And there's a tell in that blend. Go look at HPE or Supermicro, riding the exact same AI server demand curve without a presidential premium attached. Their moves are the cleaner read on how real the underlying demand actually is. Dell's gap over that peer group is roughly the market's price for a White House mention.
That's a genuinely useful way to isolate it. Watch the peers, not just the name getting all the headlines. Let's turn to the bigger structural story this week, because tomorrow's the one everyone's actually positioning for.
Wednesday, 2 p.m. Eastern FOMC minutes from June, the first released under Chair Warsh. The dot plot already told part of the story. 9 members now see at least one hike this year, up from a genuinely split committee back in March, and the median year-end rate estimate jumped to 3.8 from 3.4.
And Warsh himself didn't submit a dot, which Eleanor and I actually agreed on Monday. That's either deliberate ambiguity, or he genuinely hasn't made up his mind.
He was in Europe last week and told a forum flatly that inflation is too high, while declining to hint at what happens at the July meeting itself. That's a chair managing his own signal very tightly in public.
Give me something concrete to watch tomorrow, not just a mood.
Watch the 10-year. It's sitting around 4.5% right now. If it's still under 4.5 by the time the minutes drop tomorrow, the bond market's already leaning dovish going in, pricing a committee more worried about jobs than the June statement let on. If it pushes back above 4.5 before the release, that's the market bracing for a hawkish surprise instead.
And futures traders aren't pricing a July hike scare regardless. Better than 3 and 4 odds on a hold this month, last I checked. The minutes matter more for the tone into September than for anything that happens in 2 weeks.
So tomorrow's about reading intent, not expecting action.
Exactly that.
All right, let's close with what's actually in front of us today, because there's real news before the bell even rings. SpaceX officially joins the Nasdaq 100 this morning.
15 trading days after its IPO. That's the fast track rule for large cap listings kicking in, and it's a fast track for a reason. JP Morgan's estimating something like $4 billion in immediate passive buying just from funds that track the index, and up to $27 billion total once every fund that benchmarks to it rebalances.
For anyone who doesn't live in index land, why does joining an index move a stock at all, separate from the company doing anything different?
Because a huge amount of money isn't actively picking stocks, it's just replicating an index dollar for dollar. The moment a name gets added, every one of those funds is mechanically required to buy it, on a timeline, regardless of what anyone thinks the company's actually worth. It's demand that has nothing to do with an opinion.
And SpaceX's float is thin. 3 to 5% of shares actually public, so that flow lands on a small number of tradable shares. Estimated index weight's only about 0.5% to 0.7, but for how few shares are out there, that's a real push.
Rest of the morning, futures are higher, extending last week's record run, and there's actual data on the calendar today. Advanced trade balance at 8:30 Eastern, and the New York Fed survey of consumer expectations at 11.
The trade number's worth a glance, but it's not the main event. Consumer expectations at 11 is more interesting to me, given everything we've been saying about the labor market. If inflation expectations tick up even as hiring cools, that's a genuinely uncomfortable combination for Warsh to walk into Wednesday with.
Quick one before we move on. Bitcoin's actually worth a look this morning too. It pushed up near 64,000 overnight, which is the top of the range we've been watching for a week now.
On continued ETF inflows, to be fair to you, the 10-day outflow streak that broke last Thursday hasn't reversed since. That's a real second data point, not just one good day anymore.
I'll take the concession.
I still want the Clarity Act resolved before I call this anything more than a rate relief trade with good timing. That vote's still stuck on the same ethics provision it's been stuck on for 2 months.
All right. Closing calls, Checkable by tomorrow's show, not eventually. Eleanor, you're up, and I assume you want redemption.
I do. The 10-year, like I said. If it's still under 4.5% heading into tomorrow's 2 p.m. release, I'm calling that a dovish setup, priced in advance. Above 4.5 and the market's already flinching.
Marcus, after the day you've had, I assume the number is smaller this time.
Much smaller on purpose. Micron closes above $1,000 today, not 1,100, just 1,000, and I'll call the bottom holding after yesterday's damage, below 1,000, and I'm 0-3 by breakfast tomorrow.
Dave, first call in the chair. Make it count.
SMH, the semiconductor ETF, closes green today. If it does, this rebounds real 2 sessions running, not a one-day Foxconn bounce. If it's red, we're back to calling it noise, and NVIDIA's gap versus the group gets a lot more interesting to watch.
3 checkable calls, and after this morning, I'm not taking bets on any of them. So here's today, the 10 years level going into tomorrow's 2 p.m. Minutes. Micron trying to hold $1,000 after getting cut in half from where Marcus needed it, and SK Hynix's book building running right up against the Samsung quarter. The market just couldn't bring itself to reward. Watch the 10-year first. If it holds under 4.5, everything else this week reads calmer than it otherwise would. Dave, thanks for coming back into the chair.
Anytime. This was a good one to be in for.
If the show helps, follow Nova Ventures Daily wherever you get your podcasts and find our written notes at novaventures.us. That's your Nova Ventures morning brief. Have a great Tuesday, and we'll see you tomorrow.